Look at the U.S. stock index futures pointing to a lower open today as traders continue to digest comments from the Fed chairman, Janet Yellen, and eyed very critical economic data. 2 days of testimony on the Hill this week from a more hawkish and confident Janet Yellen cemented the idea among investors that the U.S. central bank will raise interest rates by mid-year, if not sooner. On the data front, Thursday we'll see the jobless claims, the housing starts, the building permits, and the Philadelphia Fed survey coming out at 8:30 Eastern, with the New York Federal Household Debt Report at 11 in the morning. On the earnings front, Alexion, Pharma, Transcada, a lot of earnings will be on the radar. And one African country that's a bit in the hot water with bondholders or investors is Mozambique. Let's get a bit of an update on that as we speak. Some analysts believe that the skirting around whether there will be a default by Mozambique was a tactical move to serve the government's interest. But let's get a bit of a sense of this from an analyst perspective. Let's bring in from Exotics Partners in London. Stuart Culverhouse is talking to us, is the chief economist there. Stuart, good afternoon and good to see you on the program.
Good afternoon. Thank you.
Where are we at this very messy issue as far as the Mozambique's debt and the bondholder is concerned?
We are nearly a year into this situation where we had the discovery of undisclosed loans in April of last year, just as the country was starting an IMF program, which obviously then looked very bad, and the program was essentially suspended. In October of last year, the Mozambique government announced that it wanted to seek a restructuring with its commercial creditors, and because it essentially couldn't afford to pay the interest and the payments on various loans. That included a Eurobond, sovereign Eurobond, that it had only recently restructured earlier in the year, plus also 2 loans that were apparently hidden from the IMF discussions. Together, it was about $2 billion of commercial debt that they're looking to restructure. So the government announced in October that it wanted to restructure that. It thought that it could do that by the end of the year, but it didn't happen. And they ended up defaulting on a coupon on the bond in January. And we are yet really to see any serious discussion between the government and the various commercial holders to affect any kind of restructuring. So it's going fairly slowly now, and a lot of concern about how this will work out.
For economists, investors, and analysts globally, do you think the authorities in Mozambique is playing delay tactics as far as this is concerned?
I think both sides have set out a position, and ultimately they'll have to compromise and give a bit of give on both sides and come up with a solution. It's in nobody's interests that we have a standoff that lasts for several years. That will destroy the economy and it will hinder the gas investment, and nobody really wants that. But I think we need to see a little bit of movement. The government obviously says that it can't afford to pay. Maybe people might challenge that assumption. The bondholders want to see progress on a couple of conditions, including an IMF program and an audit of this undisclosed debt, so that they can be comfortable with how things will work out. And so sitting in the background, we have the IMF discussions that haven't really moved forward over the last few months. I think at a certain point in time, particularly maybe after the Kroll audit at the end of March on this undisclosed debt, we might see then a bit more of an earnest discussion between the both sides. I think the government set out a position in October that it couldn't afford to pay, wanted a quick restructuring. I don't think anybody thought that that was going to happen. It was very ambitious. And I think they might see defaulters trying to get the bondholders to the table, but the bondholders, they have some leverage too. So I don't think they're just going to roll over just because of a default situation.
Stuart, we have about 1 minute to end this conversation. You've retained your sell recommendation on Mozambique sovereign bonds. How does this impact these countries' position further down the line or across the marketplace?
Our sell recommendation, correct, we have a sell recommendation. We've had that for a few months now. Bond prices are higher. They're in the low 60s. They're higher than where we think ultimate recoveries may be. We're looking at something maybe in the low 40s, so we have the sell recommendation. There might be upside for bondholders if there is a deal, if the IMF program happens more quickly, and crucially, if as a result of the debt audit and Mozambique's own parliamentary inquiry at the end of the last year, if they say, well, those undisclosed loans, 2 loans, are not part of the debt anymore, that they can walk away from them, then that improves the debt sustainability assessment. But at the moment, I think we fear that there might be steep haircuts for investors and that they'll get an instrument with pushed out maturities.
Okay, Stuart, let's leave it for today. I guess this conversation is not over yet. Thank you very much for weighing in on this very important story for one of Africa's struggling economies, Mozambique. Stuart Coverhouse, Chief Economist at Exotic Partners in London via Skype. Now let's talk about Ghana. The IMF, the International Monetary Fund, says it may consider extending a 3-year aid deal with the country if the new government requests an extension. That's according to the IMF Ghana chief, Natalia Koleadin. The West African country is more than halfway through almost $1 billion program signed in April 2015 to restore fiscal balance to an economy dogged by deficits, high public debt, and inflation. The new government of Nana Akufo-Addo, which took office in January this year, promised to pursue fiscal discipline and is also considering seeking an extension of the deal beyond April 2018 to December of that year.